Shri Gurubhyo Namaha. Om Shri Ganeshaya Namaha. This is part 16 of presentation by myself, Brahmadesha Narasimha Venkataraman, on INFLAPRO with systematic INFLAPRO investment and systematic INFLAPRO withdrawal plan. Investment and withdrawal both combined. Investment will be for a particular period, then after wait or after some period of wait or no wait, we will start withdrawing our requirement. In the last session, I discussed about the plan of systematic investment as well as withdrawal plan on a particular note, that is at the rate of 6,500 rupees present value of the pension, we start investing. The investment is for 12 years and it started with 81,000 rupees per annum, and every year it increased by 6% and went up to 1,53,000 in 12 years, and subsequently after the wait, and we have a corpus fund of 1 lakh, corpus fund of 1 crore 3,000, 3 lakh, sorry, we'll have a corpus fund of 1 crore 4 lakh rupees. Our investment total was 14 lakh. Now, withdrawal plan was from 3.20 is corresponding to 6,500 rupees of the current value. This is 3.2 lakh is per annum and goes up to 14 lakh 65,000 at the age of 100, and this gave a total of 3 crore 27 lakhs. And like this we had a further balance payment and maturity amount at 10 crore 65 and so on. We had a scheme worked up, and for this I already shown in the web demo. Let me continue with this. There is a folly in the system. I mentioned about 100% tax benefit, and under the present scenario, the tax exemption must be possible for this internal rate of return of 11% as well as the post-retirement rate of 9%. Therefore, I take you to another menu, another new scheme with applicable tax. Let me go to use following links to go to the custom menu. Visit bnvenkat.com and go to INFLAPRO Combo RD Pension and fill up the menu including INFLAPRO, inflation percentage and moratorium M, and we'll get RD table and highlights. Let me go to the site and demonstrate it with the same plan without a tax benefit. Say I went to bnvenkat.com and now going to INFLAPRO Combo Plan. If just like last time, let us fill the same amount, 6,500 and 11% rate of interest during the corpus building time and 9% during the post-retirement time. Current age is 35, retirement age 60, expected life 85, expected life of the annuitant is 85 years. The current age is 35. And let us have joint life with 50% to spouse time. that is during after the death of the annuitant or after the survival of the annuitant at the age of 85, then subsequently the spouse will get spouse time will start, and during spouse time the annuitant or the spouse will get 50% of in the next year, and subsequently with the same increase of 6%, and will continue up to age 100. Let us select it as a auto. Then now auto is on. With auto on, the growth will be automatically calculated. Presently it shows some 100% or default 100%, etc. That will be overridden by the auto calculation. Let frequency be yearly annual payment, and now we start filling up the inflation protection percentage. Now let it be same 6% and up for 12 years, and then 13th year onwards there is moratorium, and moratorium will not be applicable for a retirement period, post retirement period. So therefore let us leave all this blank. Blank means the previous percentage, that is 6%, will be applicable throughout. Let us submit. Now this has calculated the automatic growth rate as 1028.57 percentage. That means the maturity value will be 1028% of the corpus fund. Say 81,000 rupees is the investment and so on and so forth, and for the 46th year, 46th year of age, the investment worked out to 1.53 lakh. This is slightly more than 1.5 lakh permissible under ATC. Therefore, 3,000 rupees you can pay just in the previous year at the end of 45 years itself, and pay only 1.5 in the next year, and we can see the growth. Now, by age 60 of the retirement, the annuitant can get 3.20 lakh as withdrawal, then increase it by 6% every year, and so on. And during the spouse time, after the age of 85 completed age, the spouse will get half the previous pension, previous annuity or previous withdrawal done by us. And then again it increases by 6%, and by 99th year completion, one gets 14.65 lakh. Okay, these are the calculations as per our data, and we have got a highlight of sample, and this is the final report available, and we can now, and tax calculation is also available. See, in the previous session we stopped at the gross of this 14 crore 51 lakh. Now we found that the taxation is applicable, and tax comes also to be 1 crore 61 lakh rupees, and the tax calculation can be seen here by clicking it. Yes. Tax calculation is here. It has apportioned the cost corresponding to the withdrawal, and tax is calculated at the rate of 10% of the gain over rupees 1 lakh without indexation, with plus 15% tax, 15% of tax as surcharge. Now, the tax rates are here. Total cost add to total deposit. Total cost is the sum of all the cost apportioned, and total deposit we have already calculated earlier. The adjustment is 0.16. This is because of the rounding off. This adjustment will be there. Now let us go to the our page summary. Summary is uh, see, in the previous case we found that the same figure 14 crore 51 lakh as the gross benefit, and the taxation is 1.6 1 crore 60 lakhs or 1 crore 61 lakhs approximately, and net after taxes 12 crore 91,000 rupees. There is a fallacy here. Even though the taxation for the same under consideration is shown, it is utter folly to levy tax on this minuscule investment, because the scheme investment withdrawals are just equivalent to rupees 6,500 rupees per month or rupees 78,000 rupees per annum of the current pension withdrawal. Rupees 6,000 per month, 500 per month, 6,500 rupees per month at current value is too small to be sufficient even for a single to survive with pension as only income. And think of surviving at this level, think of saving at this level is really foolish, and tax limits will certainly be revised upwards over the full term of 65 years, and there won't be any tax burden for this case. So we will consider another case of systematic INFLAPRO investment plan and systematic INFLAPRO withdrawal form for rupees 35,000 rupees per month of current value pension. And here is the summary. We'll go to our site bnvk.com, and now combo plan we can take, then refill our data. See, 35,000. Instead of rate of interest, let it be 11% during the investment period. Rate of investment during post-retirement also will consider the same 11%, because we will continue in the same fund. Age 35, 50 years. Let us not have joint life. Let us take single life and single annuitant. 35 years and 85 is the expected life. Let us again calculate auto. Say this default person. Let the um, let the inflation protection be 6% throughout, and moratorium year starts with 13th year and continue. Let us submit. Annual हो गया. Let us take monthly figure and resubmit. This is not the same as what you intended. Let us take this here. 25, no moratorium. We are considering moratorium. Let us not consider any moratorium. This is none here. 6%. Let us not continue the moratorium. Let us invest. Let the service period be up to age of 60, and let us invest it further and reap the benefit. This is now starting with 13.501 and so on, and by the age of 59 the investment value will be 54,000 rupees and per month, and the return in the 60th year onwards will be 1.5 lakhs and above, with 6% increase every year and so on. Let us see the summary, because it's a monthly figure. Calculations are very long. Let us go to the bottom. bottom, and come to the highlights. Age is 35 years and premium paying time is 25 years, retirement 60. Now the term is 50 years only. 25 years as the pre-retirement and 25 years as the post-retirement. And starting amount, ending amount and total investment is 89 lakhs, and the corpus generated at the age of 60 is 3.44 lakhs, and withdrawal is 9 crore 89 lakhs. Further withdrawal is 10 lakh rupees on maturity, and there is maturity benefit of 14.78 crore or 14 crore 78 lakh, and gross amount of all this total is 24 lakh 77 24 crore 77 lakh, and for this the taxation is 2 crore 40 lakh. Let us see in the summary. If you want, we can see the calculation tax calculations, and also available in a click. Now let us go to our summary, already presented here. Summary is here, the same figure which I explained earlier, and there is a taxation of 2 crore 40 lakhs, and even after that the net after tax will be 22 crore 37 lakhs. Investors can invest in portfolios in their own and invest as per inflation protection, and also withdraw on their own as per the calculated samples. Startup, financial companies, advisors, portfolio managers can take the innovative ideas and improve their business based on the INFLAPRO calculations. Up for this amount of 35,000 rupees per month, one can uh, take their own choice of funds in mutual fund or share market, etc. They can take on their own. They can invest, or they can they can hire out, or they can take the consultancy of financial analysts, personal finance analyst, or fund manager, etc., and get more than this 11% interest and higher growth. The calculations are open source and one can make their own tables downloaded or printed for their choice. No login is required, no personal detail asked. Let us see in the next session about more cases and ideas of combo plan in the website, in the same website, bnvenkat.com, and one can explore on their own also. One can give their custom figures in the menu and arrive at the precise calculation. See again, we'll go back to the highlights. You can see this is the innovative scheme sample 2 with current value of pension 35,000 rupees per month, and internal rate of return is 11% per annum. One should invest in proper choice, both in debt fund as well as equities or hybrid, etc. Mutual fund would be a best bet with all this available. The person starting at the age of 35, one start investing at 13,500 up, and by age of 59 it is 54,000 or 55,000 rupees, and total is investment is 89 lakh rupees. The corpus generated at the time of retirement is 3 crore 44 lakhs. Systematic withdrawal is 1,50,000 rupees per month at the age of 60 and goes up to 6,08,000 at the age of 85. Total systematic withdrawal was 9 crore 89 lakh and so on. These figures are available here. You can also check from your um, calculations. And one interesting thing is here. Without moratorium, the investment starts at just a very low value when we are considering at 35,000 rupees per month. Here investment is only 13,500 rupees and continues at 6% higher rate. And let us consider for with moratorium. Let us consider same 45 years and invest only for 12 years and 13 years onwards. Let us have a moratorium. Now we will find that the starting investment is about 21,000 rupees. It is uh, slightly more than the previous figure of 13,000. This is 21,000 per month and so on. Let us take the age of 40 or 45 and let us have consider the investment only for 12 years and then moratorium afterwards submitted. Now the first monthly investment will be around 35,000 rupees. Therefore, one can start at the age of 47 without moratorium and continue. Now the present investment is 37,000, slightly more than the pension we desired at the current level of 35,000 rupees. Therefore, one should start with this sort of schemes at with a return of 11% at the latest by the age of 47. Otherwise, they will be paying more the investment period investment amount has to be much more than this, and it's better to start with policy of this sort of scheme or retirement planning much before the age of 47. 35 is an ideal choice. Okay, let us go to yes. Okay. See, another important session we want to discuss is why have taken this 11% and so on. See, the inflation protection desired was 6% because we know that inflation percentage is on food item is 6%. Let us see the government data on inflation. Government data we had in cost inflation index at the year of 1981 as base 100 and that old index continued up to 2015-16 and at the 2015 that 100% of 1980 figure is 1081 now and subsequent to 2001 we have got new cost index, inflation index released by the IT department with starting with 100 and 21-22 it is 370. I have combined these figures together and calculated the combined index. Combined index for the latest combined index works out to 1350 combined, and the inflation was around 8%, etc., 7% or 8%, and so on in the earlier case. Now, presently, it is 6.72% for this 41 years time. Therefore, we should give protection around these figures in our calculations. I consider 6% as the minimum for, as 6% is the food inflation. The inflation figures on year-to-year basis were of the order of 10%, 12%, etc. earlier. Now, for last 5 years, it is less than this, 6% on year-to-year basis. But cumulative figure for the 40 years is 6.72%, even as per the government figure. Therefore, and then we have seen in some previous session, one of the previous session, we have seen that to get 6.72% inflation protection, the internal rate of return should be around 11%, 10.9% or 11%. Therefore, we have considered the inflation, we have considered 11% as the, in all our calculation figures as the rate of return. The internal rate of return should be more than the inflation protection, and it is of the order of 11% for 6% inflation protection, and also that with this rate of, also with this, know that with this rate of 11%, we can achieve both withdrawal in the inflation protection as well as growth and the maturity to the same protection level. Okay. Thanks for watching. Those who have not yet subscribed, please subscribe, comment and share. Thanking you once again. Let me close.